So in this case, we are going to look into the hire purchase, which is actually one of the most important part in your revisions. The hire purchase, it refers back, or its application is just the same as what we had before, the application of the simple interest. Remember, I referred on the introduction that hire purchase is one of the applications that we are going to see where simple interest is what is used. So what happens under a hire purchase? What exactly happens? A hire purchase, there is what you refer to as a loan, like a hire purchase loans are short-term loans which are used to buy furniture, appliances, curtains, and other goods. So when a hire purchase agreement is made, there is an agreement, you agree, all right? So there is an agreement which is made on a hire purchase. It depends with the agreement. Another one, they will ask for a deposit, all right? 10% of the amount, 30%, 40%, depending with what you're given. In that case, a deposit is going to be percentage given over 100 times what? The amount. Is it 20%? Is it 30%? The percentage. It's on a deposit, that one, separate from a loan. A loan is therefore the remaining amount that you need. Remember, you paid a deposit. So it'll be the amount that is to be paid minus the deposit that you paid. So the remainder, what is remaining here, is the loan for a hire purchase now. So sometimes, because of what the agreement, there might not be a deposit. It might be direct to say that amount of the hire purchase is your loan. It might happen like that. There is no deposit. That amount is your loan. So if there is a deposit, you must first pay the deposit, then the remainder becomes the loan that you're going to need to pay up. All right. So this is what you're given here to say hire purchase loans are short-term loans which are used to buy furniture, like I explained, to say it depends with the agreement. But on that hire purchase loan, we are saying a hire purchase loan is often referred to as a hire purchase agreement because the buyer is entering into a what? A contract with the financial institution providing the loan. So with the agreement now. The interest charged on a hire purchase loan is what? Simple interest. This is the most important thing. A hire purchase loan, as long as you're dealing with a hire purchase loan, you use what? Simple interest. That is why I was saying it is an application to what we had on the what? On the simple interest. So what it means, the principal is the loan, the money that is being borrowed. So you can use simple interest. So as you can see, guys, it's just what? It is just a continuation. All right. So it is, all right, let us consider here, it is charged on the what? On the full amount of the loan over the period taken to repay the loan. Just like what we saw before. Simple interest was being taken or was being considered for the number of years. So that is the condition of the loan, for the number of what? The number of years. So this is what you're given there. When you buy goods on hire purchase, you are usually required to pay a certain percentage of the price of the goods in cash as a deposit. You are usually required. It's an agreement now that is given that it depends. Sometimes there is no deposit. If there is a deposit, then this is one that I was referring to, say on a hire purchase you are going to consider what? A deposit, which is the cash one that you're going to pay in what? In cash, a deposit. You pay a certain percentage of the price of the what? Of the goods in cash. A certain percentage. The balance is then paid off. The balance is now what? The loan. This is the remaining, which is your loan, which is what? Your balance. And that loan, because it is a loan that you're considering, we said whenever a loan is paid, a simple interest must be considered. It is charged over the full amount of the loan. So that is why they are saying the balance is then paid over the period of the time together with what? The interest. Because we are dealing with a loan, so you must consider what? The interest, which is what? Your simple interest. Your simple interest. Just like that. So hire purchase is done. You just have to consider the type of a question. So as we are going to answer them, you understand what is happening. Here you are to pay. So it means after maybe you have got what? A loan. You have taken a loan. Therefore, at the end of the period, the accumulated amount, which is the amount that you're going to pay all in all, is going to be given as what? Our accumulated amount A is going to be the loan or the balance. So it is going to be the loan or the balance plus what? The simple interest. So remember, the loan or the balance, this is our principal in that case. So in actual sense, we are simply saying that accumulated amount, because it is a simple interest that is to be added, it is going to be given as P into 1 plus what? NR over 100. Remember, we talked about this formula before. So that is the total amount now to be paid over a period of time, for that period of time, for the loan, the amount to be paid, total amount to be paid. Total amount to be what? To be paid. For the what? For the loan that you have taken. This is for the loan. Simple interest is considered, remember? So you must consider that. Let us consider this question. It has a lot of information, so we can use it to answer that we can understand exactly what I'm referring to here. So on this information, we are given that, all right? So I don't know if it's going to be clear, or let me just reduce. We are given that Tovani buys a set of drums, all right? So there's a guy named Tovani. He buys a set of drums for his band that costs 18,000. This is the cost price. But take note of what is happening here. He pays 20% in cash as a deposit. 20%. as a deposit. And the balance is paid on a hire purchase loan agreement. Take note, the balance is taken on a hire purchase loan agreement, where he pays for the drum over what? 3 years. It is the loan now that is to be paid. Over what? 3 years. And the simple interest charged on that loan is what? 12% per annum simple interest on the full amount of the loan. Remember, we said the loan, the simple interest is charged on the full amount of the loan over the period taken to repay that loan. So, meaning to say, you can answer our questions. All right, so let us take this part. A, calculate the amount that ye must pay in cash as a deposit. Let's go back to the statement of our deposit. Ye pays 20% in cash as a deposit. So meaning to say our deposit is 20% of what? The cash price, which is the cost price of 18,000 Rand. It is 20% of that. 20% of that. So this is the one that I was referring to, say, whenever you have that, a percentage, a deposit will be percentage over 100 times the amount. This is to get rid of what? The percentage. You must divide by what? 100. 20 over 100 times what? 18,000 Rand. So that was going to give us what? The deposit. 20 over 100. All right, sorry for that. I already have a fraction, so I'm just going to put this one down. Over 100 times what? 18,000. So this was going to give us 3,000 what? 600. So we have what? A deposit. This is our deposit in cash. B, determine the amount of money that he borrows on the loan agreement. He borrows the loan. This is our balance. The balance. That is the one that he borrows, the loan. This is what? The balance. The loan or the balance is simply the amount minus what? The deposit. He paid a certain amount, remember. So he paid what? 3,600. Out from this 18,000, out of 18, you paid 3,600. So what is remaining is your balance, the remaining amount. So our balance or loan is equal to what? The amount that we are given there, the cost minus what? Let us just say cost price so that that is the amount. Do not worry about that. Or you can just say cost price minus what? Deposit. So that is, it was costing what? 18,000. 18,000. This is the cost price. 18,000 minus what you paid. You paid what? 3,600. So the difference there is your balance. So that is the one that must be paid with the loan. You must take a loan to pay that one. So 18,000 minus this is going to be 14,000 what? 400. Okay, 14,400. So this is the amount borrowed. The balance, the loan, amount borrowed. All right, no problem. On C, we are being asked to calculate how much he will pay over 3 years, excluding deposit. The deposit is not part of the loan. The loan is on its own. So this is the loan, remember. So whenever you are to pay over a certain number of years, you go back, where is it? On the simple interest, on the loan, what is to be paid? The balance. The balance is paid on a hire purchase loan agreement. So we are to calculate the accumulated amount, accumulated amount, which is the loan plus the simple interest, because it is given under a simple interest. This is it. Over a period of what? Of 3 years, excluding deposit. So there, to answer this one, this is our deposit. This is our balance. Let me just remove it, and so that I use this space here. Remember here, our balance or the loan is what? We got, it was 14,000. 14,400, the one that we calculated. Remember that? So this is the one that you must pay on what? On C. To calculate that, we are to calculate the accumulated amount over the number of years, 3 years. So N being what? 3 years. The interest rate is 12% per annum. And we have got our principal is going to be the loan, the balance. Our loan is our principal. That is what? 14,400, excluding what? The deposit. So the accumulated amount, we go back to what we had before. Using the simple interest, we can take principal plus simple interest. So you must have simple interest, PNR over 100. What is your principal? 14,400 times N, the number of years, 3, times your rate as a percentage. So over 100, you're going to get the simple interest from there, which is 5,184. Then you can calculate your accumulated amount over the period of what? 3 years. You had taken 14,400 as a loan. This is your principal. 14,400 plus the simple interest, 5,184. So this was going to add up to 19,584. This is to be paid over a period of what? 3 years. Just like that. So this one simply separates the simple interest, the increase, to say this is what increased. But if you do not want to indicate all this, just use the formula direct, because we understand that we are dealing with what? A simple interest in this case. So therefore, the accumulated amount or the money to be paid over that period of what? 3 years can be given as what? P into what? 1 plus Rn over 100. Where P is the principal, the balance, the loan. So that is it. What is it? 14,400. Open bracket, 1 plus R as a percentage. 12 times the number of years, 3 years, over what? 100. So still, you're going to obtain same answers. 14,400. All right, then open bracket, 1 plus, you put a fraction, 12 times 3, over what? Over 100. So this was going to give us 19,584. 19,584. Exactly the same answer that we obtained, which is to be paid over a period of what? 3 years. So this is it. Accumulated amount to be paid over what? A period of 3 years. Then if we move on to part D, it is calculate how much you will have to pay each month. Each month, meaning to say monthly. This is now a monthly installment. It is what? A monthly installment. So a monthly installment, guys, is simply how many months, assuming that he pays an equal amount each month. So monthly, how much is he going to pay? Remember, this is to be paid. How much he will pay over 3 years. This is to be paid. Over what? 3 years. In 3 years. So if he's going to pay this in 3 years, therefore each month he is paying what? Each month. So monthly, all right, considering the monthly installment is simply that accumulated amount, 19,584, whatever that you have as your answer for accumulated amount, divide to the number of what? Months. Monthly is now months. How many months do we have in 3 years? A single year, in a single year, we have got 12 months. So what about in 3 years? Simply multiply 3 times 12. That's what? 36. So this is over 36 months. The number of months here. So once you divide this, you are going to obtain the amount that is paid each month. 19,584 divided by what? 36. So this is 500 and what? 44. Each and every month, you must pay 544 per month. Each month. Each and every month. Just like that. So use this concept to answer other questions. Where you do not understand, let me know about that one. Moving on to part E, calculate the total amount that Tovani pays for the what? For the drums over 3 years. Calculate the total. Now it is total of everything. This here, it was the total paid over 3 years, excluding deposit. We're talking about what? The balance was the one that we are considering to say out of that, how much are we going to pay? Here it is the total of everything. So including what? We are to include now the deposit. So meaning to say at the end of the day, whenever you've got this type of a question, simply add the accumulated amount plus deposit. So that will be the total amount. Total amount, it includes deposit. So it's accumulated amount plus what? The loan repayment. I mean, this one, the accumulated, which is the loan repayment plus what? Plus the deposit. Remember, this was your loan repayment. So this is it. For the loan, this was our part C. This is what we got, remember, in part C. So we're going to take this 19,584 plus the deposit, the one that was already paid. Remember, he already paid what? 3,600 as a deposit already before taking a loan. This was already paid. So it must be added so that we know what he paid together in that period of what? 3,000. In that period of 3 years, we must add the 3,600. So that was going to give us a total of what? 23,184. This is it. So if you are to consider at the end of the day, you are going to see that buying goods or items under a hire purchase is much expensive. Remember, he had to pay a total of 23,184 over a period of what? 3 years. Something that if he had cash, he was supposed to pay what? 18,000. But at the end, because you are using a hire purchase, you are paying more than what you were supposed to pay before. So you enter a hire purchase agreement knowing what is happening, to say you're going to pay more. Not to be surprised now to say, how is that possible? No, you entered an agreement. That is why it's called an agreement. So please revise all the basics of your simple interest. With those basics, you can see that we can answer any question. This is what you're simply using here. This is what you're simply using. So it's all about what? Revision.